Welcome to Dental Unscripted. Where Mike Dinzio and Paula Quinn break down the practice ownership journey, one episode at a time. Starting up, buying, and running a successful dental practice.
What up, guys? Welcome back to another episode of Dental Unscripted. My name is Michael Dinzio. We also have Paula Quinn, the other co-host of the program, and we are live right now, and we're going to be discussing all things ARs post-transaction. So we've discussed in the past ARs and if you should buy or not. Now what we're going to do is we're going to break down the issues and what you're up against if you don't really buy them and the chaos that can really have on a front office. And who better to have this conversation than our very own Stefani Sandoval. Welcome back to the show, Stefani. Welcome back. How you doing?
I'm good. I'm nervous, I think.
Oh, don't be nervous. We're expecting a lot out of you today, but
you did one episode and had a groupie. So, I mean, had some.
Yes, you did. You did have a groupie. That's so true. They're like, I don't want to talk to you, Mike. Can you just set me up with Stefani? I'm like, yes, I can do that. I can do that. And so we expect that performance out of you again, Stefani.
Great.
But you're the one that gets all the questions. You're the one that knows most of these crazy softwares. And, look, like, at the end of the day, there's really no wrong way of doing it. It's either buy or don't buy. And there's a lot of reasons why you might not want to buy. But if you don't buy, and that makes sense for you and your deal, the three of us are constantly having this conversation. And so I feel like this is a great topic that needs to be discussed, whether you're a next level client and we're helping you transition into a brand new practice, or not. These are the things that you need to be prepared for. So that is the topic today, and I'm excited to get it going. Just as a quick reminder, please, you guys are listening to this, like, subscribe, even give us a 5-star. It matters. It actually does matter in the podcast world, and we don't make any money out of this, so we just give you our time and our brains, our expertise. So we would love a little kudos if you guys have an extra time. But don't do it while you're driving. Most of you are driving on the way to work. So just wait, hold off, and do it when you get to the parking lot. Okay. Without further ado, Miss Paula, why don't I just kick it over to you real quick? You bought a practice and I'm thinking back to when you bought, and not only did you not buy, but you also had the seller, which is also a no-no, continue to bill, and you and it was a DSO to continue to bill for them post close. What would you like to tell the audience about, like, what that felt like, what that was like, and how crazy that was as a new owner, probably scared to death? You don't have cash flow coming in, and here you have someone like controlling your billing, and you're not sure what money's yours. And I'm just curious, like, what's a buyer feel like in that moment,
Yeah, it's, not only did I think you said it, but there was I don't know if it was clear. I allowed them into my software to continue to bill for themselves as I was simultaneously, taking care of the patients and my portion. So, I think it's a little bit of how next level billing was born, especially for these acquisitions, was I had to trust them, and they would tell me how much they owed me or I owed them, which was typically I owed them. I don't know how.
Somehow, yeah.
So obviously there was a lot of animosity. There was a lot of distrust. There was a lot of I would say bickering. It's much like, ending a relationship. It's like trying to get the last bit of everything that you have. One thing I will say, and this might come later, but I'm going to say it now, is they also have control of the patient. So if they want to send them to collections, they still have access to a lot of things. So it's not even just the insurance billing that you are allowing them, to touch, feel, be in control of. They can manipulate accounts. They can also contact patients. So, I'm not saying don't buy the ARs, or don't be afraid of what I did. Just don't let them have access. You need, I would say first would be a third party, last resort would be internal, but yeah, it was a hot mess
Yeah, it was a hot mess.
to say for sure.
It was a hot mess. Stefani, like, you help folks. So I'll just kind of get to the brass tacks here. So here you are, you bought the practice, you did not buy the ARs, you're doing production day one of ownership, right? So you're in people's mouths, you're drilling on teeth. And there's probably 90 days worth of ARs before you've owned that's due to the practice, or more, or more than 90 days. And every day you're getting checks into the practice, or you're getting EFTs or whatever, however the practice is receiving their money, and that's the seller's money. But at some point, your production needs billed and collected as well. And then it's like, well, whose money's who? So you help, Stefani, a lot of our clients figure this shit out. And it's crazy. It's actually complicated. Can you just like break it down? Like, first of all, what are all the forms that you can think of that the practice receives money?
Yeah.
That's number one. And then number two, how do you track this shit? Because it's crazy. It's absolutely crazy. Go ahead.
Well, I think what one of the struggles is offices usually have a hard time collecting anyways, right? I mean, if we were great, we wouldn't even be having a discussion on AR, right? Let's just, first start there. But I think the issue is that first in, first out, right? So if I, owe you money and I need to do have to pay a co-payment, how do you decide whose money that is, right? And it does go by default first in, first out. So even though you're pumping out production, you think you're collecting co-payments. If our team is not collecting or even thinking about a past due balance on top of it, that's sloppy record keeping. That is contentious between now the seller and the buyer. I think that is one of the biggest things we see. So, we're coaching on, hey, look at everything, whether you own that AR or not. If you just worry about you, now we're going to be in a battle of whose money was this?
Yeah. So you're talking about over the counter payments right there. So this is someone walks in and they're doing a procedure today, and they might have a balance that the seller had, but then you also you deserve your money for today's procedure. So then what you're saying is first in, first out in the contract. Typically in the contract, you got to collect the seller's money over your money first, which is crazy. So this is over the counter. So obviously we're collecting money through credit cards and checks and debit cards with the patient. What are some other ways the practice
Third-party
gets?
services.
Yeah.
Over the counter. Well, I'm saying over the counter, also a third party financing company is another big one, because if you don't switch that care credit over into your own account, guess who gets that money? So, that those are the over the counter ways. It's third party financing. It's a check. It's a credit card. That's over the counter.
I think insurance, right? We're leading into the insurance conversation. So, when you're not purchasing the AR and a provider is getting paid on EFT, right? We just have to be in charge of record keeping, marking that this payment was received. However, it was deposited into the seller's account. So no transaction really needs to incur unless, the buyer has a write up in the contract that they're getting a percentage of whatever's collected on behalf of the owner or the previous owner. I think where it gets tricky is when we have checks coming in, like, are we documenting it correctly based off of what date of service? I mean, I don't even want to get into the whole conversation of if we're utilizing credentials. I don't even want to touch that topic, but
Yeah, that's another topic. That's right.
that's a whole nother show.
That's a whole nother
right?
topic. So what you're
Right.
talking about is Delta sends us a check today or whatever, a check, and there's an EOB and there's money
Well,
on that. And yeah.
Let's back this up just a minute. So you asked what are all the forms of payments that come in? So we
Yes.
talked about from a patient perspective. From an insurance perspective, it is a virtual credit card. It usually comes via fax, and you plug it into your merchant services like a credit card. That could be the sellers or it could be the buyers. You've got EFTs, which are electronic deposits. So it's a direct deposit typically into the seller's account until that gets switched over. Then we have the normal check that comes attached to the EOB, which is what you're talking about. And that is after the claim is paid, that's the description of what was paid and why with the check attached. So if it's an EFT, you know, the buyer has to know enough that when you have to go in and find those. You don't get typically the check and the EOB in the mail. You go on and you find it. You know, sometimes you'll get an EOB with nothing attached. And then the virtual credit cards come via fax. So there's like a lot of different ways payments are coming in.
Yeah, that's kind of what I was getting to is there's like, what is that? Like six, 7 different ways of funds hitting our account, and you got to track this. And so thank you, Paula, for that, because that is it. It's first of all, identifying all the different ways the practice receives money. That's probably step 1. How do you get money in? Step 2 is what? Like, I guess just having a system for tracking it at that point.
I think step 2 is knowing what that cutoff date is, that it's now the buyer's money and not the seller. So they have to have an understanding of that, like whose money's who, which would go, I guess, hand in hand in tracking. But yes.
So there's a cutoff date, and essentially, and your professionals, your attorneys, whoever's helping you will give you that date, because the day that the deal transaction could be the day before, it could be the day after when the funds actually hit. So, okay. So now, you know, as the buyer, you know, all the ways the money's coming in, and you know, the date that you have to start tracking it. And then you guys already said, and I'll say it again, for having to manage all this, you get a fee typically. So the contract, the purchase and sale, dictates, and this was one of your negotiating points in the deal when you were negotiating with the seller, is what is the percentage that I get to hold back for collecting for you? So the front office person has to manage all of this. You deserve a fee for managing it, right? And so you have to figure out how much percentage you would hold back. So Lady Stefani, what is like the number one thing that you see that front offices miss then in all of this? Like, I think you have a solution for this for our clients that we provide, but like, what is it? Where does it go wrong for front office teams in general when they're trying to deal with this post close?
I think that they rely just on their software. I think, oh, well, if I just post the payment, it'll automatically be allocated to the correct provider and I'm done. But that's, you know, never the case. Is we can't trust that, especially when we're talking about, you know, 2 parties, right, that have to split a payment. How do you do this? So, I mean, it's over the counters. I think insurance and those forms of payments are a lot easier, but they miss the over the counter. And that's a big part of it.
So what are the software hacks? Like what's a hack? What's a post transaction hack or a software hack that you could do to make life a little bit easier post close. And by the way, all softwares are different, I know, but in theory, is there a way to approach a software when you day one? Are there some quick and easy changes that you could make that would make tracking a little bit easier from a software perspective? Can you think of anything like that?
I think merging some of the older providers' ID numbers into like one, right? But we can't just necessarily get rid of them because we didn't purchase the AAR. They still need claims worked on, billing statements. So it is difficult to just say, hey, we're just going to start over from square one, merge those providers, and just only use our stuff. I mean, it's you're going to run into a problem.
Yeah. So when you post, so if I do production today, essentially you're posting production to the new providers based on the new provider ID. And then you have the old providers, could be the same doctor, by the way,
Good.
right? Could be the same provider. So if you had an associate that was working in the practice before, and then you retained that associate, you're saying just create a new ID for that same associate, and then make sure when you're posting to post the right provider based on the date of service, essentially.
Well, yeah, and Dentrix is one of the softwares that really allows you to change how you would like your payments allocated. If it's first in, first out, is it by, provider? How do you want this payment to be dispersed? But the rule of thumb is first in, first out. And that's how it should be. Not all softwares, do that. Open Dental is nice because they automatically line item, right? And will distribute the payment according to what the patient portion is. So, I mean, there are some things that you can do, but the best, I feel, transparency that we can provide, the seller is, look, we're tracking every single payment, whether it's an insurance or a patient, one, patient at a time, per day, by month, whatever they need. I think it makes them feel good too. That right? Because there's still an obligation of, you're still going to go try to work on getting my money. That's why I'm paying you a collection rate.
Yeah. Oh, go ahead, Paula. Yeah. I'm glad she raised her hand.
Am I delayed right now? Am I delayed?
Go ahead. Yeah, you're good.
Okay. So a couple things you have to remember, and hopefully I don't offend anyone. Number one, the ARs you didn't buy for a reason. There's a mess. Whoever's manning up front, and even if you do buy the ARs and they're kind of a train wreck, there's a reason. So to put all the faith in, listen, the basics, the bare necessities aren't 100%. So now you're going to put 8 different ways payments are coming in to 2 different providers into somebody's hands that's too busy to have it clean in the first place. The second thing is that person has worked for that seller 5 years, 10 years, 40 years. You're now paying their paycheck, but you just have to remember when it comes down to brass tacks, you're probably going to lose out in a situation. So I'm a big component of putting it in a third party's hands for the 6 months, however long your contract is. It's a neutral party. They don't even know what's happening, or they may. I mean, we do when we do it, but it's fair. It's just fair. This is this, that. There's no, in between.
Well, sometimes, and to your point, Paula, sometimes sellers don't trust the third party, and which is bad for the buyer, and they trust their old front office gal more. And then that creates a weird, like, the new buyer is the actual employee of the front office gal. And then they're sitting here saying, like, I'm your boss now. They're not your boss anymore. And it creates that weird dynamic.
Well, what's going to happen is I'm going to go get my dentist money that I've been working for 30 years. He or she is retiring. This is their money. Hell or high water, I'm doing it. So how much time am I putting in? Is it worth the 3 or 4% that you're going to get, that my dedication is now we've got 6 months to collect this money. Then you've got sellers calling direct lines to that person. Hey, how's it going? What is this? Any checks? We've had situations where front office held checks and was going to give them to the seller without even running it through the buyer.
Yeah, we've had that.
It's just it's again, I think a neutral party is just the best way to do it. So, they're just posting the way they see posting should be. They're reporting the way, and they have a dedicated job, and it's to go after ARs and to bill for the current. So they've got multiple jobs, but they're also not answering the phone. They don't have history with the seller, buyer. They're just, they're just billing and posting.
Now there is like a collaboration there. So here let's just say you take Paula's advice, which is great advice. And it doesn't even have to be next level, but we would love that business, right? And Stefani manages that department, and we know how to manage that situation post close. It's very sensitive. And I wanted to make this point before I moved on, and that is, this is the number one. Most attorneys tell me this is the number one reason why people get in lawsuits post sale. It's over the ARs. It's not over, I don't know, redos or work in progress or whatever the case. ARs are the number one lawsuit post close of a dental transaction. So that's why this topic matters. That's why this topic is very sensitive, which is why we're having it today. But Paula, to your point, okay, so let's say that they buy into your, let's say the audience buys into that and they hire us for 6 months and we manage all the insurance claims. Okay, so that's a really good thing. It's a neutral party. We know what we're doing. We're going to track everything. But there is a partnership, Stefani, with your department, which is a billing department, outsourced billing, and the front office, because they are collecting over the counter. So again, there's insurance money and there's over the counter. And you talked about in the beginning of this episode, what's that look like? Both of you have a job to do in tracking insurance money versus over the counter. I mean, I guess walk the audience through what I'm talking about.
Yeah. So basically we work together to say, okay, it's a little bit of coaching, right? It's teaching them, here's what you do. This money, document who it was for, what type of payment it was, if it was, what kind of money it was. And then also saying, okay, who's it belong to, right? How much? Is it a split payment, or is it one payment that just goes towards balance? Is it one payment that just went towards a co-payment? But again, we also then say, you guys have to make sure if you collect that money, it's for a balance, and you're checking for a balance and a copay, because then it's like a disputed line item saying, well, you collected $1,000, but that patient had $500 balance on top of it, right? That's not all, the new buyer. And it's important because also this is now my new boss, and I would want to get them their money quicker, right? They just purchased a practice. So they're wanting to make sure you collect for me. And again, going back to what you said, is that loyalty to saying, yeah, but I also, need to look out for, provider X, whatever his name is.
Yeah, we've had front office ladies and managers be texting the seller, hey, this is what's going on. And sometimes it just feels like the front office gals are literally working for the seller. And it's kind of a difficult situation. Imagine owning a practice for the very first time, and here you feel like you're in competition with your own team, with the seller that just sold you the practice. And here you are, you don't have enough money coming in. You're stressed out about cash flow. The beginning of acquisitions there's always an AR or cash flow crunch. I've talked about that in other episodes, that it's just like you're a buyer and you've got a little bit of working capital, and the working capital is draining and I'm freaking out and your collections aren't coming in. And then you're writing checks to the seller at the same time. It's like the money that is coming in, you don't get to even keep it. So this is a very, very sensitive topic. It's challenging. And I think it's just one that needs to be discussed more often. I think that the attorneys out there and the brokers out there don't really appreciate what we're talking about right here. They write the contracts, they make these decisions to buy or not buy the ARs, but they don't really understand what all goes into it from a day-to-day perspective. And I don't blame them for that. How are they going to know? Yeah, go ahead, Paula.
You, Michael, is there a world where, and this is buyers don't get excited, I'm asking, is there a world where in the contract, the buyer doesn't get reimbursed or paid, or I'm sorry, the seller for 90 days?
Yeah, we've done that before.
You have? I almost think that should be standard, because the seller's getting cut a check. Now, granted, they may still owe something on the practice, but you know, but they're getting cut a check, you know, and if they don't owe anything, this is all retirement money, what have you. The buyer, if they don't buy ARs, or even if they buy the ARs and they're not getting money right away. And they are stressed. And then, you know, I'm not saying that you lose a lot of patience, but there is some sort of transition of the schedule doesn't look the same. I don't know if it's because the front's busy, I don't know. There's this period of time where I feel like the production takes a small dip. It would make sense to add a layer of protection in for that buyer. The seller should be fine for 30, 60, 90 days, you know?
Yeah. So
we have these sellers breathing down these buyers' necks of like, hey, it's the end of the month. Where's my check? And it's like, we haven't even reconciled yet. You know what I mean? It's almost like we're just asking for 15 days. Yeah.
I love that. I love that, because now we're talking about something even different. So let's just assume right now that no, it's actually on point. It's totally on point. I was going to get there. So you're reading my mind. First, it's just figuring out who owes who. And like we've been talking about for about 30 minutes. Now, fast forward, you know what you owe because you've stayed meticulous. You're super detailed. Now the question, to Paula's point, is when does the seller get paid? And I always suggest that and Paula, you make a really good request. The atypical way is once a month. I always ask that the seller shows up at the office for their check, and sellers do that, by the way, 15 days after the end of the month. So let's say you're January, you bought January 1, you've owned the practice for a month. The seller needs to give you a minute to just get your thoughts and get your spreadsheet together. And I say 15 days after. So this would be February 15th. You would pay the seller for all of the ARs that came in through January. That's always what I ask for. If we're not on the job, I've heard of situations where sellers are coming in every week. Could you imagine the seller walking in every week? How much did you collect from me this week? It's like, what are you talking about? I think at the end of the day, like sellers, just to get in the mindset of a seller, you know, the sellers don't have a business anymore. They don't have that cash cow. So they're like desperate for their money, their last little thing that they can control. So they're coming in, they want their money, and they're
didn't collect for the last 10 years.
Yeah. They didn't collect for the last 10 years. And now they want you to be way more organized than they were. And so the best case scenario is probably what Paula said. You could ask for it. It's not atypical. What atypical is once a month, like I outlined. Paula makes a really good point is like, if you could hoard cash for 90 days and collect your money and their money and hold on to your working capital, because when you don't buy the ARs, you get usually about $100,000, 50 to $100,000 of cash sitting in your checking account. And you're supposed to use that money to pay your bills while you're waiting for your money to come in. So the bank does give you AR or working capital to subsidize you not buying the ARs. But what Paul is suggesting is you get working capital, plus you get maybe 90 days of the seller's money and working capital. And then maybe in 90 days, you write a check for it's going to be a bigger check, but at least you got through that cash flow crunch that you experience in that first 2 months. Sorry, Paul, what were you going to say?
Yeah. No, that's it. You'll have started getting paid on claims and things that you've done. And it also just, for me, the seller's hair is usually on fire. There's so much going on with getting to know the new team. What do I do marketing to learning how to be a business owner? And then you've got this seller calling, breathing down your neck, and I get it. I was one of those sellers. I experienced it on the buyer end. And then when I became the seller, I was crazy.
You were the crazy person. That's right.
And they let me be crazy, and they shouldn't have, but they did. But I knew the state of the office, and I didn't trust a lot of things that were happening in there.
I think that's it right there.
I had Stefani as my biller, so I had a lot more trust in that part of it. Mm-hmm. But there were other things. And so I don't know. I think it would give, especially if because what we do is we create a spreadsheet, and we're very transparent with the buyer and the seller. As long as everybody's okay, they can see all that being documented, mm-hmm. So it's not like, and then if the buyer felt really good and in control, they could cut a check sooner, mm-hmm. Hey, it's mm-hmm. piling up, you might consider paying out, so you're not paying 50,000.
Piling up.
Yeah. I don't know. It's a thought.
It's a good thought, and it would be great if you could work that in. I'll challenge all the brokers and attorneys to listen to this episode, because these are the woes of it. And cash flow is king for a buyer. I think it's really interesting, Paula, because you have been a buyer and a seller, and you admitted that you were stressed on the front end, and we actually talked about at the beginning of this episode that you did like probably the worst thing that you could do, and that is give them access to your software. But
then I did it back.
And then you did it back to them afterwards. So you were equally kind of quote unquote crazy on the back end. And I think that's really interesting, because this is probably why sellers are quote unquote crazy, because they don't trust their own teams.
But I think with like in Paula's situation is that she did have a tight hold on her AR. She was probably crazy for 30 minutes or 30 days. Yeah. I don't think she was there that long, right? Needing to recoup, because she knew exactly what was still left, what work was in progress, or, where the payment was going to, these kind of things. So in her situation, she had a cleaner type of office, but we don't see that in those other offices. So I do think, I find it funny that all of a sudden they care about their collections.
Yeah.
Yeah.
It's just, but I think that prolongs the process.
It's the last thing that they can hold on to. Their business is over. Their career is quote unquote over. It's the last thing that they get to micromanage. And it's really easy to micromanage something if it's all that you got to micromanage.
Wait, let me also defend the sellers in the fact that they don't know there's an AR problem, because they've owned this thing 10, 20, 30 years. They live the way they want to live. And all of a sudden, their practice has a value on it, a worth. And it's not as much as they anticipated. And then the broker says, your ARs are shit. And they're like, well, what do you mean? Susie, Mary Beth, whoever, she always collects. I hear her. And they're like, well, no, look at your patient AR. And their practice is getting pulled apart, telling them that this is crap. And by the way, I don't even want to buy your ARs. They're so shitty. And they're like, wait a minute. So now they wake up and they're like, oh, wait, you telling me I have $100,000 or 50,000 or so? Yes, they become desperate. It's the first time they've even known that their ARs are shit
Yeah.
and that they have money laying out there everywhere that can be collected. So
That's
yes,
really
they're
interesting.
now very
That's
motivated.
that's really interesting. And you're probably spot on because I mean, it's why we have a billing department, right, Stefani, that people don't realize how bad their ARs are. And it's very sad to think that they find that out the day they sell their practice, to Paula's point. And so now they're finally, for the one time in their career, managing that. That's actually pretty sad. So folks, if you own your practice, look at your ARs, know your KPIs, get on the phone with Stefani.
How
And
many calls do we get?
yeah, I mean, Paul, I think what Paul
Can
is
you?
saying is how many calls do we
Oh,
get
yeah.
about crappy ARs? And yeah,
Well,
it
no,
is
last
it
minute
is sad.
from a seller. How many, like, can you clean up my credit in a week? Can you clean up my ARs in a month? It's like it's too late. The damage is done. I mean, no, we can obviously credits because you don't want to pay more, but all of a sudden they're in panic mode and want to boost the value of this practice. You know, we can clean it up, but it's probably not going to boost the value, you know.
Mhm.
Sorry. I'm delayed. I can't, anyone who's listening, I can't tell when.
Yeah.
I think also the thing is like when you know AR is in an insurance bucket or if it's in a patient bucket, they're looked at differently. At least with the insurance, they're held to a liability of like they're going to have to pay you if it's, you know, plausible and it meets the claim requirements. I think the unknown is when it's all in the patient.
I love that you brought that up,
a
Stefani,
huge-
because you guys got me thinking about this as a buyer's rep. And no one's thinking about this right now. And so, Polly, you're giving great insight on the idea of maybe cutting that check 90 days, which is a great idea. I'll have to push the attorneys and they're going to be like, well, that's not normal. And I can't agree to that. My client can't. But it's kind of the way the deals typically go is how all these attorneys fit. But asking that is a great idea. The other thing that got me thinking is exactly what you're saying, Stefani, is looking at patient AR differently than insurance AR. If I'm a buyer's rep, I'm looking at patient portions way more than I'm looking at insurance. In fact, it would be nice if I was buying ARs that I would value the insurance ARs much higher and value the patient portion much lower. Because guys, think about that. If you buy a practice today and there's claims, let's say there's $20,000 worth of claims, to Stefani's point, there's a really good chance you're going to collect that money because the insurance is probably going to pay it unless there's a lot of reasons why maybe insurance might not pay. But for the most part, it's pretty solid. But if you have a lot of patient portion, now post-close, you got to hunt down all those patients. You're a brand new owner. You're going to threaten collections day one of ownership? Like that's a difficult conversation. So I almost don't want to buy patient portion and have that weird conversation with my brand new patients. So anyways, that's a fun little topic and thing to consider. Well, we're 40 minutes in. The rule of thumb is 35. So we've already gone past our time. And I think it pays tribute to how important this topic is. I wanted to have this because I'm going to send this episode to almost every single one of our clients that are not buying ARs because they need to appreciate what's happening. And so I think if I just challenged folks that were not next level clients, if I would challenge you, it would be roll this episode back right before you close and listen to those first couple steps. That's really just figuring out how you get paid, figure out how you're going to track it, set the expectations of when you're going to pay that money. And honestly, just micromanage the crap out of the front office day one. And that's a tough pill to swallow, but that's what you got to do to make sure that you don't end up in some weird lawsuit of some sort. So Any final comments from you two experts before we close this down?
I think I've said my piece.
Perfect. Paula, anything else from your side?
Mine will come after it's over, so I'll just
with a delay. Well, thanks, ladies, so much for your time, your brains, your expertise. Really appreciate everything you guys do for the industry. You're literally making an impact every single day, and on this program and with our clients. So thank you for everything you do. Merry Christmas. And without further ado, let's shut down another episode of Dental Unscripted. Please like, subscribe, follow, write us a review. It matters. Thank you so much. Have a good one, guys.
all right.
Thanks for listening. Let us know how you like the show. Rate us on Apple and Spotify. Subscribe and follow for more.